Hello, my name is Randy Williams. This program is called Keiretsu Forum Presents, and today we're talking about secrets of angel investing. And every month we're going to have rock star entrepreneurs and guests that come to talk about the secrets of many things, but today it's going to be focused on secrets of angel investing. Let me tell you a little bit about Keiretsu Forum. We're fortunate to have grown to 40 locations globally. We have 780 companies we invested in. And today, my guest is, I can't say this because all the entrepreneurs will be listening to this, but this is the rock star here. We're so fortunate to have funded Rob Neville, CEO of Savara. Also, we have a transparent community at Keiretsu Forum. The founder, including myself, or any member, including myself, if you're an investor, please let us know. I'm a happy investor of Savara. So let's start off with Rob. Give us a little history of Savara. And fortunately, you are in the great state of Texas, but why did we meet you here in Northern California?
It was a long journey. We originally were presenting in New York, and one of the chapter presidents of the Mid-Atlantic, Howard Lubert, saw the presentation, and we went through their process, presented at the Mid-Atlantic, and eventually we ended up presenting in the Bay Area. So
let's go right into secrets, because what's so fascinating about Rob Neville, and, you know, I want to challenge whoever's listening to this today and in the future, because 350 angels have invested with you and your team at Savara. That could be a record. So correct me if I'm wrong. Please tweet me, please email, tell me if I'm wrong. But you've raised from Keiretsu Forum over 100 investors or members of Keiretsu invested in you in a myriad of rounds. And I think you've garnered a little over $10 million from us. And also, one thing powerful about Keiretsu is a referral network, and they've brought in friends too. I think you have another
another 8 million from referrals from the Keiretsu network.
Okay, so
a total of $37 million raised from about 350 angels.
So we love VCs, we love the ecosystem of capital out there, PE, but you don't need them. Why don't you need that type of capital? Because you raised 37 million, but how have you done it? And most people say, well, why don't you just go to New York and go to, or go to Boston where there's more capital for your space. So let's talk about what you do and more importantly, how you've done it.
Okay, so the first thing, what we do, we're developing an inhaled antibiotic for patients with cystic fibrosis. They get chronic chest infection, and we've taken an antibiotic, it's a known antibiotic, and we put it into an inhaler that you breathe the antibiotic in, and they take that for the rest of their lives. So that's the product. We just had very good news from the FDA. They're open to us going directly to a phase 3 trial, which we're now preparing for. So we've made great progress. It's actually remarkable, Randy, how much progress we've made on angel money. No one would have thought, typically companies at our stage would have raised venture capital, but we had such success with the angel route, and we just kept doing it, and we kept getting angels interested in funding the company. So we haven't needed venture capital up till this point.
So I've seen you pitch, Rob. So let's focus on the pitch. And I invest because obviously I like the moral compass. I like you. I like obviously the big market. I like the fact that you've had, quote unquote, I think you said a 40X for your last shareholders. And I did ask you if your current shareholders are in this opportunity. They said yes. So that's a big validator for me. But let's talk about the pitch. So entrepreneurs listening, what are the nuances? Tell us, give us some secrets why you're so successful raising angel capital.
So I've been learning as I've been doing this. The first thing I think you've got to realize is that angels don't just invest with an economic hat. They're not just looking for a return. They are, and they want to get a return, and they want to get a return soon. So they do look at this from an economic standpoint, but there's other factors that motivate angels. And the two that I'm aware of, and this is material that I've read, there's a hedonistic hat that angels wear, and that is that they want to be a part of something. They're very successful. They've got lots of money. They've got time. They want to be part of growing something. And so you need to find, as a presenter, as a CEO, a way to integrate those folks and take their wisdom into consideration as you're building your company. And the other one is an altruistic hat, and that's somewhat what you said. And they want to do good with their money. They don't want to just throw their money at the next widget. You've got to find a way in your pitch to appeal to the hearts the angels. They give tons of money to charitable causes. They want to give their money towards good things. If they can combine those three different hats, the economic hat, the hedonistic, and the altruistic hat, I think you've got a good starting point.
Well, that's powerful, and I know because we have 365 members in my organization just locally, and then I have license and rights around the world. We have 40 locations, 2,200 angels, and as I meet our angels around the world from Istanbul, and I get to see you at great places. I've seen you in Istanbul, Northern California. Where else have I seen you, Rob? Toronto.
That's right. Yeah, that's right.
So how do you manage all these angels? And fortunately, we're a gracious Shark Tank at Keiretsu. And so, yes, we are hedonistic, but we're altruistic. There's a lot of social bottom line investors. My wife and I were fortunate to retire 17 years ago when I started Keiretsu, and said, okay, let's try to have impact with the money that we've had. Let's not try to lose it. Let's try to make good investments, but let's try to do good. So tell us about managing all the expectations, the communication, because entrepreneurs are listening and say, okay, that's great. If I got 5 investors, I wouldn't know how to execute on my business because I'm trying to manage those 5 investors. How are you managing over 350 angels?
So the first thing is an attitude that I have with the angels is they're not a liability. They're not a problem that I have to manage. They're an asset that I get to be a part of. I get to go to, I think I've got 5 IP attorneys as investors. I get to leverage those skills when needed. When we are raising a round of funding, I get to leverage those folks. They can re-up their investment, or they can introduce me to other investors. So it's an asset. It's not a liability to me. And I also am proactive with communications. I put out a quarterly shareholder brief. Our team gets on a call. We have quarterly calls. So we run like we're a public company in many ways. But being proactive with communications and also executing. And I've heard from many other angels, they've got portfolio companies that take money, they take the angel money, and they never hear from them again. You know, when you're communicating regularly, the angels respect that. I mean, this is really their company. I run Savara, so it's their company. They deserve to know what's going on in the company. And I also have an open door policy. Anybody can call me anytime, any of my angels. And just by saying that, they just don't.
You get any sleep?
I get plenty of sleep, yeah.
Well, let's get back to product because everybody that is an angel investor, and conversely, the entrepreneurs need to think about IP protection. So we have a device here. What is so novel and so unique about this device that you have, this inhaler?
Well, it's an unmet need. We're treating an infection caused by a bacteria called MRSA, and there's no product out there currently for these patients. We also have an orphan. The Orphan Drug Act gave us 7 years of exclusivity, and added on top of that another 5 years exclusivity, another act of Congress to encourage antibiotic development. So we have 12 years of exclusivity, basically a monopoly in this space for 12 years. So that's the protection. We also have patents and the like, but you can't beat 12 years of exclusivity by law.
That's a long runway. Yeah. So target market is obviously
cystic fibrosis patients.
Yes, and so the age of usually is what?
So
under 10?
The product will be, hopefully, when we get approval, will be from 6 years old all the way through adult.
Yes, and so the life expectancy goes with your product. What is it now? What will it be?
Well,
approximately.
We will not have to measure a change in life expectancy. CF patients live to about 37 years old right now, and typically it's lung damage that ultimately takes their lives. And this is one product that will prevent lung damage, but we will not have to measure the impact that has on life expectancy.
Okay, so
I think when you get back to you touched on a point earlier, and that was, what does it take to present? What is the secret to presenting? And you asked me that, but then we moved on. I'd like to address that if that's okay with you.
Of course.
Okay, so one of the things that I don't think angels are aware of, the entrepreneurs, when you're standing up at the Keiretsu Forum and there's 5 other guys that are going to be presenting, I think tomorrow we have 12 or so. There's 12 other people presenting, and you're one of 12. How do you rise above the noise of the 11 other guys, right? How are you going to be the one that's memorable the next day and the day after when these folks go home and they've got to actually pull out their checkbooks? So I think that's a topic that I'd like to talk about, is how do you tell a memorable story? And I think the entrepreneurs are storytellers. And think what is it? TED Talks. You know, a lot of angels. I keep saying angels. A lot of the presenters, the entrepreneurs, they think they've got to cram in as much as they can. They've got to cram in data, especially when you're doing the life sciences. You need to cram in as much as you can at your presentation. It's actually the opposite. You want to tell a crisp, clean story. I'm going to give you, I'm going to ask you a question. Steve Jobs was without doubt one of the best keynote speakers. How many hours do you think he prepared for each of his presentations?
Very little.
Give me a number. I'm going to
under 15 minutes.
80 hours. 80 hours. So what he did is he got his deck.
Because I think he's spontaneous, and as a talk about rock stars, he had great content. He already had knowledge. So 80 hours.
80 hours, and so what he did is he rehearsed, and then he brought in new people, and you have to have some humility. I do this when my team comes. I hate it because they say no, you're using the wrong inflection, you're using the wrong word, and that's not even you got to have humility. But if you do that over and over until you get it down, you've got to finish within the 10-minute slot or whatever it is that you've got. Every word, there's no ambiguity in the words you're using. You need to address every question that may come up in your presentation. That's the number one trick, is you're a storyteller, and you have to tell a story that's better than the other stories, and you've got to rehearse that over and over.
Let me ask you, I think the most powerful thing is to engage first and then tell the story. So how do you reel us in? How do you start a presentation? How do you engage? What's your hook to get everybody involved? Steve Jobs, obviously you said he prepared 80 hours, and obviously it's a product launch, so people were there for a reason, and then you're competing against. You said you're competing against 12. You're actually competing against more tomorrow. Tomorrow's our biannual expo, which is 21st biannual. It's at Microsoft.
How many am I competing against?
We have 700 people coming to watch you tomorrow. But there's 19 companies presenting.
19.
Of which half of them are portfolio companies already, and then also close to half are Keiretsu capital companies. We have a top-off fund, and we're hopefully going to announce tomorrow we're topping you off with more money, but we'll wait for tomorrow.
Okay.
So getting back, how do you set the hook, i.e. engagement, and then getting back to what you just said, which I think you think is more important, is a story.
Well, I think the story starts with the credibility of the presenter. So what I do when I begin presenting, I say I'm Rob Neville, CEO of Savara. I have started, run and sold companies. My last company I sold for $100 million after 1 year and 1 week of angel investment. So I returned, and I think it's actually 30-something X return to my angels. I need to go and rerun the math there. I can't remember. But I believe even more in this. We're doing something that is meaningful. We're literally saving the lives of children. And I personally am an investor in this company. I put $350,000 of my own money. Let me tell you the story.
Great.
So that's somewhat what I would start with in a presentation.
So touch people's hearts. Skin in the game, which is powerful.
It aligns you with the angels.
You got a past track record. This is not your first rodeo.
Correct.
Right?
Correct.
And you got to get to 30 or 40x, because I think I once heard 40x. I would invest in 20x, but let's just say 30x.
Let's say 30x,
Yeah, but whatever it is, I did ask you on the stage, probably 4 or 5 years ago, how many past investors are coming in? Getting back to what you said, you got to be prepared to answer questions like this. It's a tough question. You answered.
Well, it was a family of investors, and that family are in this. So there's a group of them. That family is in Savara.
Great. So congratulations. Yep. Okay, so let's keep going. The secrets of pitching and presenting to angels. So we are halfway through the show right now. So let's really dive into this right now, because we're trying.
I'm all done. I've got no more stuff. That's it.
Me too. And so what's really important here is we're trying to help entrepreneurs, because wherever we travel, and getting back to our 40 locations, I'm fortunate. I was in Bangalore. You weren't in Bangalore with me.
No, I wasn't.
No, but you were in Istanbul.
Yep.
And so from Shanghai, Singapore, we just opened Jakarta, and I think the DNA of this world is fortunately changing. And again, I want more jobs for, what's going on obviously in Syria. We need to create jobs, and the entrepreneurial spirit will hopefully create jobs. And so I see it throughout the world. I think the world's flat. I think there's great deal flow everywhere. But why have you resonated everywhere? You've gone to now 23 of my chapters?
About that, yes.
Are you meeting your milestones?
Yes.
You're communicating?
Yes.
You probably ask, why do you keep raising money? Because you got plenty of money in the bank.
Yeah, so when we close the Series C that we're raising right now, we already have 8 of the 10 committed. We would have closed then 38 million or so. total, and we will have at that point about 19 million in the bank. You raise money when you don't need to raise money. That's the trick, especially in life science. It is a riskier area. It takes a lot of capital to develop these products, so you need to raise money ideally when you don't need it.
I don't think you've heard this term, but I like entrepreneurs using drip irrigation. So come back. If you meet your milestones, there's always capital at Keiretsu Forum, and hopefully other angel groups for you. But meet your milestones and come back for other capital. So you dripped, irrigated on our chapter. So what are you telling them? I mean, obviously you have that generic pitch, that story, but also in the audience is past investors like myself. And so you're probably having a private lunch afterwards. They're asking the tougher questions, or maybe they're asking right there. But how do you keep raising money at Keiretsu Forum?
So there's some tricks with Keiretsu, and this is general. We've also raised from about 6 other angel networks like Keiretsu. And there's some tricks to pitching. So the initial pitch, a lot of entrepreneurs don't realize, when you first pitch at an angel group, you never get money. The initial pitch is to get support to get the due diligence done. And many companies that I've seen that are very good companies present fantastically. They get interest, but it dies because the due diligence doesn't get done. And so the first time you're presenting, you're really trying to get folks motivated enough to spend their precious time to join the due diligence team. I advise companies, and this is a tip, go into that initial presentation with the due diligence done, even if you've done it. It's basically a business plan, and I'll gladly share my due diligence with folks if they're interested. Go into that initial presentation holding it up and saying, I need you to come in and join our due diligence. By the way, it's already done. You just need to redline it and personalize it. I think you get a lot more traction because the angels are busy. They love to be part of a due diligence. They really don't have the time, and it fizzles out often. So you've got to get over that initial hump, and then you've got to go back and present the second time. And when you present the second time, don't just do the update. You guys offer a free update, is that right? It's a
depends what chapter. We have updates. We have different variations from a full presentation down to an update. But we always welcome our portfolio companies to come back and say hello and do an update, or
But what I suggest to entrepreneurs is don't go back and just do the 4-minute update. Do an entire update, because by the time you present the second time, the people that were in the room are different. The entire presentation with a slide that says, here's what your peers found when they did the due diligence on us. Great team, huge market, etc. There's a slide. Now, let me tell you the whole story, because half the people in the room are new, and the other half, it's a month or two later. They're not going to remember your pitch. You need to pitch again and remind them of who you are. So it's a double presentation. That gets you your initial money, right? That gets you your initial round. Then you build on it. It's a relationship business. Randy, you and I know each other. You're an investor. With all your shareholders, your initial shareholders, you maintain strong relationships with them, and then when you have another round, you go back out and and it goes from there.
Great. Well, let me ask you a question, but let me give a gift to entrepreneurs that are listening. Is we have a due diligence book called Keiretsu Forum Due Diligence Handbook, and it's on our website. It's over 400 pages. It's a collection of, I think this is 14 years of gifts from my members, and it's it's unbelievable, the content. But it has a template in there, so you can begin your due diligence before you approach us. But if, in fact, you can reel us in to help us do your due diligence, we will. But there's no promises in due diligence. So what Rob's saying is that you probably did a lot of your due diligence in the beginning, and then maybe addendums came in, and maybe members, Keiretsu Forum members gave a little more content, and now you have a very strong, large, probably due diligence book.
Well, yeah, so we had a fantastic due diligence team that put a lot of work into producing a 160-page document, but not all companies have that. And so what I'm suggesting is that they do a first draft before they even get to, and if they can get existing investors or shareholders that are part of the network, and if not even part of the company, to put their name on it, you're getting a head start before you give that initial presentation.
Excellent point. Our Northwest chapters was grown over 400 members. I was up there last week in our Seattle and Kirkland chapters, and we have a new team member who's been there 11 months, and he has helped facilitate due diligence books. But he has done 29 books. When I say he leads leaders. He leads leaders. He helps members do the due diligence on the company. 77% of the companies that have the due diligence that got funded this last year at Keiretsu Forum Northwest, because simple as preparing the book. And if you need help with the book, just go to our due diligence. You can go to our website and/or go in the Apple stores. It's free there. We have it on all the Apple bookstores. Okay, let's get back to. Okay, so we started at the beginning, the pitch. Okay, so now you have all these investors. You're communicating. I always ask about exit. You're thinking about, obviously, executing on your business plan, but you're also thinking about exit. Exit is where we make money and you make money. And fortunately, Keiretsu Forum members, I'll speak for myself, we're patient. You know, I'd rather have $1 billion, obviously, opportunity here than you selling early for 200 or 300 million. So tell us where the
I like your numbers, by the way. I like your numbers.
So do I. And will I get those?
Well, I can't tell you. I don't have a crystal ball. But yeah, we're hoping for an exit. The trick for me though is, as CEO of running a company, I can't make a company bias. Okay, I know that the angels want to see an exit and they like an exit soon. As CEO, I can't make someone biased. What I can do and what I'm in control of is building a great company. So what I've got to do is continue to build a company and have options for exit. You know, IPO is the kind of option, and exit into a shell would be another option. Or, you know, maybe look at different exchanges that we could list that you would have liquidity, or maybe an acquisition. But I can't make those. I can't make someone biased. I can focus on building a great company.
So the pharma companies that are listening to this interview, obviously markets have shifted a little bit. You know, IPO market is not as robust as it has been, but you don't necessarily have to go IPO. You just mentioned many channels for exit.
Right.
But you obviously know who your exit partner will be. And I want to ask a question. I hopefully can understand this, but friend or foe, meaning when you attract somebody that's going to buy your company, institution, you know, are you figuring out, are they friendly, or they're going to copy what you're doing, or they're going to try to replicate? Friend or foe? Are you with me on this? You want me to keep going with this?
Yeah, you can. I think in the pharmaceutical world, it's very different. We've been building this product for many, many years, and because of the Orphan Drug Act and the protection, somebody would have to overtake us and beat us to the market to compete with us rather than acquire us. So just in the pharmaceutical world, it's not as big a concern as it would be in some of the other spaces that you'll invest in, like technology.
Well, I remember in Istanbul when I was there, and you were asked to speak, and then you did a presentation. You gravitated and garnered capital in Istanbul from our members over there. But I remember an entrepreneur raising his hand, and I didn't know how to answer it. But he says, you know. He talked about NDAs. Remember that?
Yeah, he had an idea. If I'm thinking of the same guy, and he had an idea, but he wasn't willing to share it with anyone. And he wanted to know, how do I start building this company? But I'm not willing to share it with anyone, and I want to get people under NDAs, and they don't want to sign an NDA. And I think
you nailed it.
I nailed it.
I think it went to me. I said, wait, I can't answer this one. So how did you answer?
I don't exactly remember, but I basically said to him, I will not even give you $1 for your idea right now. I don't care how good an idea is, because it really comes down to the execution of that idea and taking that idea and putting legs to it and building that into a company and then exiting that company. And there's a long way to go. You know, there's tons of great ideas. We all have them, and we think, oh, that was my idea. But it really, you know, if you didn't put the effort behind it and execute, then it's really
so execution, nothing. IP. Don't be insecure. Get out there and market yourself. But you know, he was insecure. I could feel it. Since he didn't really have anything. And we love the dreamers out there. But one thing about the dreamers, you know, when they come to Keiretsu, we really need to have validation of capital, something that shows us, or as you've gone through your process, these great milestones through FDA approval process. And so before we invest, we have to have these milestones. It's usually capital. So
one of the things that I encourage entrepreneurs to do, in many of the presentations, they show you this hockey stick where they've got, you know, if we just get 5% market penetration, we'll be worth $1 billion in 2 years. And you know, you see these hockey sticks, but there's no credibility behind them. I encourage, and we've done this, you go out and you do market surveys, quantitative and qualitative market analysis, and you get credible third-party opinions on what the size of the market is and what you're going to be able to, you know, charge your product at, and then build that into your model so that it's credible. And because as an angel investor, I don't have time to go and validate all that. I want to be able to see somebody else that's done the work on my behalf. Does that make sense?
Absolutely. Yeah. Well, the program, we only have 5 more minutes right now. And so, okay, so we started off on secrets, and you changed the word. That was a powerful word. Tricks. Is that what you said, tricks?
Did I?
Yeah, you said.
Okay.
Maybe you didn't?
I don't know. We'll have to rewind and see. Okay.
Well, let's get back to premise on secrets. So give us some more secrets, because you are always fundraising, and I personally like the validation of who's behind you, and meaning the capital that's already in. So if I want to invest with an entrepreneur tomorrow, there's a half dozen companies I've invested that are coming tomorrow, and I'm very careful. I will stand up and I'll be transparent. Yes, I'm a happy investor, but don't follow me. But I do follow investors. So people follow. You have a rock star board. You have some obviously talent there. You have a lot of members. Do the members talk?
The members of the angel investors that are investors in Savara, there's groups, pockets of them. For instance, when we're raising a new round, and what I did is I went to every city recently that we have investors, and that's about 15 cities, and I had meetings with about 15 people or so on average in each of these meetings, explained where we're at, why we're raising the money. Because one of the interesting things as a CEO, when you've got this many angels, there's many things that I can't do without the permission of my investors and my shareholders. I have to actually get them to consent. Yes, you can now raise money. Well, they're not going to consent unless they understand exactly the motivation behind that. And so I go around and these groups meet, and they all know each other. I mean, they do meet on a regular basis. So
Well, again, getting back to entrepreneurs, they only have so much time. So what's the best use of their time? I mean, is it good use of time for them coming to Keiretsu? What about the other angel groups? Tell us the uniqueness or differences or nuances of other angel groups in Keiretsu.
Yeah, so I think I've presented, I haven't been successful in all angel groups. You know, different angel groups have their own, specific areas that they like. Some of them are geographically sensitive. We're based in Texas. Keiretsu is a professional angel group, so you get a completely different experience from an entrepreneur standpoint, at least. The due diligence process is professional. The meetings are well organized. We've also presented at private, small 20 to 50 people groups that are not professional. They just love what they're doing and they organize it, but it's a very different experience. I mean, Keiretsu, I think, has been, it's remarkable how much money we've been able to get from Keiretsu, and I think it's because it's so professionally run.
Well, thank you, Rob. Well, we're professionally run.
So I want to ask you, how did it go? How's it going viral? I mean, when I presented last time, you had 30 chapters. Now I hear you got 40. I'm getting invitations from Bangladesh.
No, Bangalore.
Bangalore.
Maybe Bangladesh.
Hong Kong recently, or was it Singapore?
Singapore, Jakarta.
Jakarta. I'm getting invitations from all these chapters all the time now to come present at these places. It seems like it's gone viral to me. How have you managed that?